Hey, good morning. Let's go over today's trade plan. So in the overnight session, we've seen a little bit more selling in the market based on the news out of Europe, but at the same time, we've seen responsive buyers still defend that 2675 to 2875 area, which is going to be used as the initial support zone as well as the micro bull bear zone. How a market responds to negative news can be very telling. So today, if we don't get a lot of broad market weakness and sustained downside momentum, and the market actually holds above pre-market support or above initial support, that would be a very bullish indication, and it could lead to a upside balance breakout. It doesn't mean it has to happen today, but the market responding to negative news in a way where it's actually still stable and not breaking down is very telling. So we're going to be watching today off the open to see whether this balance that has developed over the last three sessions actually holds, or if we get a failure and a breakdown below the initial support zone and pre-market support zone. But in order to get that breakdown, we are going to have to see participation from the other markets and sustained downside momentum. In the event of a break below initial support, the market can test 17 quarter, 19 quarter, and 11 half to 13 half. And if the market is really exhausted into those support areas, then we can expect responsive buyers to be active in defending those zones, especially the 11 half to 13 half, or even the next one at 0575 to 0775. The further down you push, the further kind of below value the market goes on the smaller time frames, it gets extended, the higher the likelihood of a bounce off that zone. So it can happen at 17 quarter or 19 quarter, but if the move is really just kind of beginning and gaining steam, then it would be safer to allow the market to really get exhausted into 11 half to 13 half before expecting a bigger bounce. But just understand that can happen off 17 quarter or 19 quarter as well. That's something that will need to be determined in real time. On the upside, we have pre-market resistance at 38 quarter to 40 quarter. A breakout above that area would be a signal that the market is gaining some strength here short term. 42.75 to 44.75 is the top of the short-term balance area that we're trading in. It's the initial resistance zone, and that's really the main area of resistance. And in order to break out above that area, we need to see broad market strength. We need to see sustained upside momentum, and then we can get a break. We know that the market's not going to continue trading in this range for too much longer, and it's only a matter of time before we break one way or the other. So just understand that right now the market is range bound. It's basically ranging between the initial support zone and the initial resistance zone. That's the balance area that's developing right now. Eventually, there's going to be a break from that balance, and whichever way it breaks, as long as the underlying environment supports the breakout. So in the event of an upside breakout, as long as there is broad market strength, advanced decline at some decent levels and trending higher, and sustained upside momentum, then it can really go from there, and it can attract even more buying, and anyone who's short can get stopped out. On the downside, similar scenario, where if it breaks to the downside, then there can be some panic selling coming into the market on the smaller time frames, and that can take us down to 11 half to 13 half, and that's where the market would get exhausted and higher likelihood of buyers stepping in. 11 half, 13 half, 0575, 0775. So heading into the open, we know market's stuck in a range. It's still in a sideways balance. But if we start seeing signs supporting the idea of a breakout or a breakdown, then we'll start looking for a trade in that direction. But until we actually break, this is a balance area. It is a range-bound environment. And until we actually get the break, which doesn't have to happen today, but today is going to be a test for the market to see how it responds to negative news out of Europe. And if it stabilizes, if it just simply doesn't really crack down and break initial support, that in itself will be very telling for the future direction of the market, and eventually that can lead to a upside bounce breakout. So our short-term directional bias continues to be neutral, and we're just going to be watching to see how this balance resolves. And within the balance, if the underlying environment is supporting range-bound activity, then as long as you're getting good trade location, there can still be some decent setups at the key support areas. So those are the main ideas heading into the open. Let's see if the buyers can really keep this market together, and we'll take it from there.